Hello, this is Mijun from Mijuran University. Let's start today's Mijusi News for December 1 Sen. Welcome to Mijun, where we continue to uphold the fundamentals of United States stock investing as always. The final month of the year has finally begun. When my family used to live in the United Kingdom, I personally really disliked the arrival of December. That's when winter begins, and winters in the United Kingdom are truly terrible. It rains often, it's very windy, and it's cold too. But the hardest part to endure was that the sun set way too early. In England, during winter, it gets dark around 3:30 or 4 o'clock post-meridian, and the sun doesn't rise until after 8 o'clock in the morning. So those long winter nights were just so terrible and frightening. Of course, in the summer, it stays bright past 10 post-meridian. Anyway, every winter I would get depressed and lose my energy like this. This winter, for the first time in a long while, we're starting off in a warm place called Malaysia, and we're feeling happy about it. On December 1 Cent, starting with positive energy, let's dive into today's big juice and news. We'll start the first broadcast of December by reading a comment left by one of our precious subscribers. Today's comment was posted 9 hours ago by someone with the username I like tech stocks. Hello. In the past, Miju, you replied to a comment saying, today's investment ends today and tomorrow is the start of a new investment. Do you remember which broadcast that was? I want to watch it again, but it's hard to find. If anyone knows, please let me know. Thank you. I looked for it but couldn't find it. I'll keep searching. Anand, I don't remember when I said that because I don't have a script. Everything on the show is ad-libbed. So I personally think this is a very important investment principle. I'd like to explain it once more for you. Coincidentally, a good example was just found. The reason I keep repeating this is because we often make the mistake of thinking that when an investment drops a lot, we shouldn't sell it, or that it's not a loss. So let's say you invested 10 million won and it got cut in half to 5 million won. Even then, people think that as long as they don't sell, they haven't really lost 5 million won. But this is clearly a wrong way of thinking. Because right now, the money I have is 5 million won. It has to go back up to 10 million won for me to break even. But at this moment, I've definitely lost 5 million won. But if there's a high chance that this stock will keep going up, then it's right not to sell at a loss and to keep holding on to it. We call this holding on, right? But there's one condition for holding on. Do you know what that is? At this point, even if this stock has dropped a lot, you need to have the belief that its price trend will be the best in the future. But if you lack that belief and realize you made a wrong judgment, even though you feel this way, there are people who don't want to sell because they don't want to take a loss. That's not the right thing to do. Whether you invest your 5 million won in this stock or sell it, it's still the same amount. So, if there's a stock that looks better than the one you're currently losing money on, you need to boldly cut your losses and move your funds to that other stock. That way, when a rebound happens, you can generate a higher return. That's why I keep explaining the investment logic that you should either cut your losses or make new investments or decisions in the same stock. Now, I found a really good example related to this, so I'd like to explain it to you with an example. On November 24th, I traded various stocks like this. At that time, I rarely revealed this on the broadcast, but I did share it then. At that time, I told you that a stock called Suteredaji was facing its biggest crisis, and I shared some bad news with you. The biggest issue at that time was that the price of preferred shares was plummeting, so there was a problem with the fundamentals. On top of that, there was even a risk of being excluded from the Morgan Stanley Capital International Index. So the message I gave you all at that time was this: until these two major risks, these fundamental risks, were resolved, it's probably best to avoid strategy investments since stock prices have already fallen over 50%. But even at this point, the judgment was that it would be better to move this money to another stock. Because the reason why strategy dropped so much is, of course, because Bitcoin and Ethereum dropped a lot. The problem is that even if Bitcoin and Ethereum rebound sharply in the future, since strategy's fundamentals have collapsed, there's a high chance it won't be able to fully enjoy this rebound trend. That's how I judged it. So after that, as you can see here, I sold all the shares I had in MicroStrategy, and then I bought 3 more stocks. I bought more Bitcoin ETHT, and as you can see here, I also bought 88 more shares of Bitmain. At that time, the logic I had was this. Going forward, Ethereum and Bitcoin have increasing chances of rebounding, but these 3 stocks are likely to rise more than MicroStrategy from here. That point in time was November 24th. Now after that, I'm going to show you the rate of return. I sold MicroStrategy at $177. If you look here, the current stock price is $177. For a week, MicroStrategy's stock price didn't move at all. It only increased by 0.5%, a slight rise. Now, but if you look at the status of other stocks from that point on, the BIT Exchange Traded Fund is up 16.9%, while ETHT has surged 22.36%. And finally, in the case of Bitmain, it went up by 27.78%. Well, as you all know, the reason is that from this point on, after I delivered the news that MicroStrategy was facing some difficulties. Bitcoin and Ethereum surged last week, and these 3 stocks are following that trend. That's why both Bitcoin, Ethereum, and Bitmain were all able to rebound sharply. However, the problem at that time was that in the case of strategy, there were fundamental issues and the momentum was too weak. So we could clearly see that it couldn't benefit from this rebound at all. So that's why I want to emphasize to you once again, investing is a new beginning every single day. That's why you need to constantly review the portfolio you have today. Are the stocks I currently own really the best among all the stocks in the market right now? If there are any stocks I own that don't look so good, I should boldly remove them. And if something looks better than what I currently own, then I should boldly include it in my portfolio, right? So my personal investment logic is that if we keep updating our portfolio like this, we can achieve better returns. I hope you find this helpful. This is the Monday broadcast. Today, I'll start by summarizing the United States stock market trends from the past week. First, let's look at the S&P 500 map. I've set the period to 1 week, and over the past week, we've seen a really strong upward trend. Most sectors and stocks are showing a very bright green color. To exaggerate a bit, it seems like everything went up except for Oracle and Nvidia, and the green isn't dull, it's really bright. So you can see that there was a sharp rise mainly among a lot of tech stocks. Recently, stocks that have lost momentum also didn't show a good rebound trend. Even though the market is running like this, companies like Oracle and Nvidia, which had lost momentum, weren't able to post gains. Once again, this was an opportunity to see numerically why momentum investing, which I keep emphasizing, is so important. And if you look at the movements by index, the index that rose the most is the microcap. Microcap stocks jumped 6.23% in a week, while the Nasdaq rose 4.95%. Ultimately, these 2 sectors performed best. This suggests growing expectations for an interest rate cut. Because if interest rates drop further, microcap stocks with a lot of debt can benefit greatly. Naturally, their interest expenses could decrease, and in the case of something like the Nasdaq 100, the reduction in interest wouldn't be as significant. But tech stocks are invested in with a very long-term perspective, right? If that happens, the discount rate for tech stocks, which we discussed last weekend, decreases. Lower interest rates mean a lower discount rate, so valuations can rise. For that reason, in the past week, there's been a rally mainly in microcap, small cap, tech stocks, and the Nasdaq. You can look at it this way. Next is the market breadth. The market breadth has now stabilized a bit. Of course, it still hasn't broken through 60 yet. The index needs to hit 60 or 65 for a real upward trend, but it's still at 58 and 44. Stocks with strong long-term trends now exceed 60%. This figure needs to reach about 65 for us to say the correction is over and feel reassured. However, the volatility index is strong. It dropped back down to 16.35. In that case, since we consider 20 as the standard, and it's now fallen below 20. Now, just looking at the volatility index, it's a bit of a relief. If a correction happens, it could encourage us to buy more. That's one way to see it. Next, the fear and greed index has also risen significantly. There's still extreme fear, but it's at 24. That means if it goes up just a little more, we'll escape from extreme fear. You can see it as many people, especially those who are outside the market, have started to come in. And the crypto market's fear and greed index is currently at 20. Whether it will drop again from here or continue to rise and finish the correction, you can see that we're at a very important point right now. If you look here on the side a few months ago in March, it also dropped below 20. And although it seemed like it was rebounding, it dropped once more. And after that, it hit a double bottom twice and then showed a sharp rise. Next is Midu on top pick. The performance of Midu on top pick over the past week was truly remarkable. A stock like Credo soared by as much as 33%. Bitmain rose by 27.38%, Celestica Plus by 22.98%, and ETHT also increased by more than 20%. Well, in addition, Broadcom rose by 18.45%, B2 by 14.33%, Micron Technology by 14.04%, and Coinbase also went up by 13.48%. However, unfortunately, there are still some stocks that haven't ended their downward trend yet. For example, when I changed the period to 1 month, the Ether Exchange Traded Fund, which tracks Ethereum, has dropped by as much as 48%. B2 also dropped by 38%. That means it's still too early to feel relieved. If you compare it to the 50-day moving average here, it still looks like there's a long way to go, so the 50-day moving average needs to recover. We only feel reassured the correction is over and it's time to rise once the 50-day moving average recovers. Now, the good news is that there are quite a few stocks whose 1-month returns have turned positive. It's being proven once again that Google is leading the market right now. Therefore, investment returns have dropped significantly from what I showed you in recent months. The reason is, for example, my returns were really good in November 2024, but now that November is no longer included, and I actually had a loss this month, the investment returns have suddenly dropped sharply. That's how you should see it. For your reference, in the first quarter of 2025, my portfolio was down by as much as 22 or 23%. That's right. So you can see it as a trend where I'm gradually recovering from the negative start of 2025. Next, I should compare it to the market returns because my personal goal is to outperform the market returns, specifically the S&P 500 by more than double. First, if you look at the performance for the month of November, surprisingly, the S&P 500 finished the month positive. No one expected the S&P 500 to end November in positive territory. With a sharp rise in the last week, it ultimately finished November in positive territory. For the Nasdaq, despite a strong last week, an early big drop led to a final loss of 1.51%. The reason is, for example, in November 2024, my returns were really good, but now that November is gone and this month I actually had a loss, you can see that my returns suddenly dropped sharply. For your information, in the first quarter of 2025, my portfolio was down by as much as 22 or 23%, so you can see that 2025, which started in the negative, is gradually recovering. Next, I should compare my returns to the market because my personal goal is to outperform the market, specifically the S&P 500, by more than double. Now, if you look at the performance for the month of November, surprisingly, the S&P 500 finished the month positive. No one expected the S&P 500 to end November in the positive. With the sharp rise in the last week, it ultimately finished November in the positive. In the case of the Nasdaq, although the last week was good, it started off with such a big drop that it ended up at minus 1.51%. The Mijuan portfolio was at minus 51%. Now, if you look at the returns over the past year, that is from December 1, 2024 to November 30, 2025, the S&P 500 was up 13.54%, the Nasdaq was up an impressive 21.58%, and the Miju Momentum Strategy portfolio was up 31.48%. So as a result, in November 2025, the goal was not achieved. It's for the same reason as in October and November. ET, HT, B2 strategy, and other cryptocurrency-related stocks performed very poorly. So the short-term goal of exceeding the S&P 500's return of 0.13% by more than double was not achieved. But fortunately, there were quite a few stocks that did go up. So you can see it as stocks like Google, First Solar, Credo, and Broadcom outperforming the market return, which allowed us to recover to some extent. So just like I showed you in the second screenshot for now, we are still maintaining a successful performance that exceeds the S&P 500's return by 2 or 3 times. And personally, what I hope for is, since there's only 1 month left until 2025, when 2025 comes to an end, my short-term goal is to achieve an annual return of over 35%. That's how you can see it. If Bitcoin and Ethereum rebound in the future, if the overall upward trend in the tech sector accelerates, the gap between the Mijuan portfolio and the market returns could widen even more over the next few months. I'm looking forward to it. You can use this as a reference. Let's move on to today's main article. The main character of today's main article is Micron Technology, which is making headlines this year after a long time. Micron's stock performance is amazing. As you know, Micron Technology was excluded from the United States top picks for a while, but it was recently included again. That date was November 20th. At that time, after a short-term correction, the stock price dropped to $201. But after picking it up then, the current price has risen to $231, and Micron has gone up to $2,006. In the end, in just about 10 days, the stock price has soared by as much as 17.45%. So at this point, I'm really curious whether Micron's rally can continue. I'll read an article about this, and I'll also summarize and share with you the additional research I've done. Micron Technology's stock price posted a significant rise, supported by solid trading volume, even in the relatively quiet market after Thanksgiving. This movement may have been influenced by the earnings reports of Dell, Technology, and Hewlett-Packard announced early last week. So, recently, a very strong trend has been observed in Micron Technology, and one of the reasons for this is said to be the earnings results of Dell and Hewlett-Packard. On Friday morning, Micron's stock price surged by 2.9%. Technology's stock price. Relatively, Technology's stock price has been relatively quiet since Thanksgiving. On Tuesday, Thursday, Hewlett-Packard announced a weaker-than-expected 2026 earnings outlook, which caused Hewlett-Packard's stock price to fall. At that time, the chief executive officer said that the main reason was the price of memory semiconductors. What he meant was that the price of memory semiconductors went up so much that earnings dropped. On the supply side, they are well prepared, but price increases are definitely appearing. It is expected to have about a 30% impact for the entire year. This is quite a significant amount, said Chief Executive Officer Loris. So, in the end, semiconductor prices are rising a lot right now, and among them, memory semiconductors are increasing in price at a very rapid pace. All right, this is a negative factor for Hewlett-Packard, but it's the main reason why many investors have bought Micron. That's how you should see it. Hewlett-Packard relies on Micron as a major supplier. Now, another company, Dell's stock price actually went up by 5.8% on Wednesday after its earnings beat consensus. Analysts said that Dell is also experiencing pressure from rising memory costs. However, the reason its stock price went up is because it's being evaluated as managing costs much more effectively than Hewlett-Packard. You can also see Dell as a customer of Micron. Now let's take a look at the supply side. There are three companies that come to mind when we think of memory semiconductors: Samsung, SK Hynix, and Micron. These major companies have reportedly converted some of their existing dynamic random access memory lines to high bandwidth memory. Right now, the demand for high bandwidth memory is rising rapidly, isn't it? It's because of artificial intelligence, that's the reason. As of the end of November 2025, with only 1 month left in this year, I'll share the information I've gathered and the industry's outlook. Because of the price, because it becomes a higher price, that's why the price goes up. Because it becomes a higher price. Because it becomes a higher price. Because of the high price. Because of the higher price, that's why it happens. It becomes a higher price. Because of the higher price, because it's higher. Because of the higher price, because it becomes a higher price. Because it becomes a higher price. Because it becomes a higher price. It becomes a higher price. It becomes a higher price. I expect that this will be an important year for entering into higher diffusers. The global semiconductor market is growing 8% to 9% annually, reaching about $600 billion in 2024. If this growth continues, it's expected to surpass $1 trillion by 2030. Especially among them, the server and network sector is expected to grow by more than 11% annually. And the reason for that is, as we all know, artificial intelligence, dedicated data centers. Because of artificial intelligence, the server and network sectors are experiencing tremendous growth. Now, when network servers increase like this, eventually, memory semiconductors will inevitably grow as well. When we talk about memory semiconductors, dynamic random access memory and especially high bandwidth memory come to mind. For these two parts, the amount installed per artificial intelligence accelerator continues to rise. That's why we can expect structural growth that far exceeds the overall semiconductor average. Now, the key word here is structural growth. Semiconductors, particularly memory ones, are cyclical and track the economic cycle. So memory semiconductors have always been cyclical like this, but now we can expect structural growth instead of cycles. The reason is that over the next few years, as artificial intelligence continues to rise, demand will be created. That's how we can sum it up. Now let's take a look at the supply side. Three companies come to mind for memory semiconductors: Samsung, SK Hynix, and Micron. These major companies have reportedly converted some of their existing dynamic random access memory lines to high bandwidth memory. Right now, the demand for high bandwidth memory is rising rapidly, mainly because of artificial intelligence. That's why they've converted production lines that originally made dynamic random access memory to produce high bandwidth memory instead. As a result, there's been a decrease in the supply of dynamic random access memory for PCs and general purpose dynamic random access memory for smart devices. According to several reports, this could lead to a global memory shortage and a sharp increase in prices from the end of 2025 to 2026. High bandwidth memory is expensive, and for memory semiconductor manufacturers right now, it's more profitable. That's why they're moving away from making dynamic random access memory and switching to high bandwidth memory. So as a result, there's now a shortage of dynamic random access memory as well. That's how you should see it. What about TrendForce Research Institute? In the fourth quarter of 2025, dynamic random access memory prices compared to the previous quarter, not the previous year, compared to 3 months ago, they expect an increase of as much as 8% to 13%, and for products including high bandwidth memory prices could rise by 13% to 18%. And one more thing, there are also predictions that the rise in contract prices will continue not only at this time, but also through 2026. Now, if prices keep going up like this, margins will improve, sales will grow, and we could see a tremendous trend. Also, 2026 is the year for PCs with artificial intelligence features, known as artificial intelligence PCs. I don't have one yet. So what is an artificial intelligence PC? It has built-in artificial intelligence that works offline, and that's not all. With smartphones and PCs featuring built-in artificial intelligence now emerging, replacement demand is expected to surge in 2026. Now, the problem is that these devices, artificial intelligence PCs and artificial intelligence smartphones, require more than twice the amount of dynamic random access memory compared to existing devices. So, when artificial intelligence devices appear, the demand for dynamic random access memory semiconductors could eventually double. Therefore, in addition to high bandwidth memory, the pipeline for general dynamic random access memory is also expected to be very solid. Demand for both is rising. Artificial intelligence is increasing high bandwidth memory demand, which in turn is reducing dynamic random access memory production volume. On top of that, as artificial intelligence is being added to PCs and smartphones, they require more than twice the amount of dynamic random access memory, so the demand for dynamic random access memory is also increasing. They're both rising at the same time, so you can see it that way. Next is NAND. There are two main memory semiconductors. Dynamic random access memory and NAND. NAND's demand isn't rising as much as dynamic random access memory is. Still, there are reportedly qualitative changes in the market. Data centers now focus on both artificial intelligence training and a larger share of inference services. There's also a trend of rapidly rising demand for high-capacity storage. So, in the market, by 2026, in the enterprise solid-state drive, that is, the enterprise SSD market, Micron's high-layer stacking technology is expected to contribute to profitability. This is the current outlook. But what's even more important than that is ultimately high-bandwidth memory. How much high-bandwidth memory grows as a result of artificial intelligence work, this is what ultimately determines Micron's stock price. You can see it this way. The variable that will have the most explosive impact on Micron's stock price is definitely high-bandwidth memory. In Korean, you can think of it as high-bandwidth memory. According to market research reports, the high-bandwidth memory market is expected to be only about $3.1 billion in 2025. But by 2030, it is expected to grow to over $10 billion. That means the yearly growth rate reaches 26%. On top of that, 2026 could be a turning point because High Bandwidth Memory 4 will be released. High Bandwidth Memory 4. Mass production will begin in 2026. Currently, the main product is High Bandwidth Memory 3. This is the 5th generation, but High Bandwidth Memory 4. The transition to the 6th generation will happen in 2026. But High Bandwidth Memory 4 and 3 are different. From High Bandwidth Memory, 4 customers include NVIDIA, Advanced Micro Devices, and Google, are reportedly demanding customized high bandwidth memory optimized for their own logic chips. The unit price will be much higher. What opportunity does Micron have? SK Hynix currently leads in High Bandwidth Memory 4. However, starting from High Bandwidth Memory 4, the process complexity suddenly increases sharply because it's customized. Therefore, ultra-fine processing and packaging technology become even more important. Therefore, up until now, Micron, which has been lagging behind compared to SK Hynix, has been in the background. They have an ambitious plan to raise their market share from 20% to 25% at this new starting line. And in fact, Micron actually is. They're currently claiming that in terms of power efficiency and performance with high bandwidth memory 4, they're ahead of Samsung and SK. They've also stated that they're currently negotiating 2026 supply volumes with their clients. We need to see whether this kind of statement is just baseless confidence or if it's actually backed by something. Next, in the market, there are concerns about oversupply. Because as I mentioned earlier, memory semiconductors are originally cyclical. So when things are going really well like this, in the end it will fall, and it has no choice but to fall. There are many people who see it this way. Some people are concerned about an oversupply of high bandwidth memory in 2026. However, leading research institutions disagree. They believe that demand will continue to exceed supply until 2026, so this situation will last for at least another year. Especially since artificial intelligence models are continuously advancing and artificial intelligence is getting smarter and smarter. This means required high bandwidth memory capacity will likely grow exponentially. That's why every Ecuron batch sells out. Currently, demand exceeds supply. This will likely continue into 2026, so if demand continues to be higher than supply like this, the average selling price will inevitably go up, and if the price is high, the margin can keep increasing as well. That's what we can expect. For example, there's Open Artificial Intelligence's massive data center project called Stargate. What is Stargate? Reports indicate it may need up to 900,000 dynamic random access memory wafers monthly. What does that mean? This is just a single project. But there are now predictions that this one project could take up as much as 40% of the world's total dynamic random access memory production capacity. So by 2030, artificial intelligence training demand and inference infrastructure expansion will keep growing, right? If that happens, high bandwidth memory is very likely to become the fastest growing segment among DRAMs. Let me say this again, high bandwidth memory has a high unit price. So as a result, the margin also increases along with it. Sales and margins can both increase simultaneously, creating a positive impact. Now, next is Micron's technological advantage. Micron is emphasizing that its power efficiency is 30% better compared to its competitors. I'm not sure that's true, but that's what they're saying. The issue of data center power costs will become even more serious in 2026. Therefore, if such low power, high bandwidth memory becomes possible, we can also expect the possibility of securing additional big tech clients besides NVIDIA. So if we understand this background, in the end, it's highly likely to evolve from a commodity to a specialty. That's what I mentioned. What this means is you can see it as a shift from cyclical stocks to stocks showing structural growth, meaning the fundamentals are improving. As we enter 2025 and 2026, how does Wall Street view Micron? Just like I did in the past? It's completely changing from a stock that follows the semiconductor cycle to a company that's essential infrastructure for artificial intelligence impact. So if you look at the positive scenario, if Micron stabilizes the yield of high bandwidth memory, 3E, and succeeds in early mass production of high bandwidth memory, 4 in 2026, then the technology gap with SK Hynix will gradually narrow. In this case, it's highly likely that it will break through the previous PR band and reach a new all-time high. What was the previous pair band? As I said earlier, the pair rises because this is a cyclical stock. If a demand issue or many defective products occur during fair transition, this happens. If Samsung starts to release large quantities in the high bandwidth memory market, profit margins could be damaged in the price competition. So far, only SK Hynix is selling a lot, but in the end, Samsung can't be ignored either. If that happens, price competition will begin and margins will eventually drop. That's our view. Lastly, I'll wrap up by sharing my personal investment plan for Micron. For now, as Hewlett-Packard's chief executive officer mentioned, it seems that a market environment where suppliers lead the pricing will remain valid until 2026. Therefore, there's a possibility that memory semiconductor prices will continue to rise even into next year. But of course, expectations for the high bandwidth memory semiconductor supercycle have already been largely priced in. That's why Micron's stock price has risen so much. If high bandwidth memory 4 proves superior in technology and yield, the story could begin again. Unlike high bandwidth memory 3, high bandwidth memory 4 is customized. Therefore, customized memory semiconductors are now emerging, and if they can show technological and yield superiority here, there's a good chance that their 2026 performance will consistently exceed market consensus. If that happens, I believe there is still plenty of room for additional stock price increases for at least the next 6 months. Of course, from the middle to the latter half of 2026. Samsung and SK Micron are continuously expanding their factories, so there's a high possibility that new production lines will start operating. So in about 6 to 8 months, new factories will begin operating. If signs of oversupply start to appear after 2027, there's a strong possibility that the oversupply cycle could slow down again. And if it looks like the cycle is picking up again, what about Micron? There's still a chance it could be removed from the Mizoom top pick list again. Thank you. The last content prepared for today is the Mizoom podcast. So what analysis article are we going to listen to together on the Mizoom podcast today? We're analyzing a stock called Broadcom, and the main point being made is that there's a high possibility that demand for artificial intelligence applications will surge in the future. If that happens, it will have a very positive effect on Broadcom's stock price. That's how we can sum it up. I'd like to take a moment to explain this. Since before Noonanim, you have, as I mentioned, artificial intelligence can be divided into 2 stages. The first is training, and the second is inference. Inference is the application stage, where artificial intelligence is actually used. Now, these two have one big difference. First, when considering why companies train artificial intelligence, their purpose is singular. The goal is to be number one. Training aims to create the smartest artificial intelligence, as that's key to surviving competition. That's why NVIDIA GPUs are the most capable and important. The goal of training is to use the best chips to make the smartest artificial intelligence. That's how I see it. But inference is a bit different, because from the inference stage, artificial intelligence-related companies start generating revenue and making profits. What that means is, in the inference stage, it's about saving costs as much as possible, turning it into a product, and selling that product as much as possible. That's why you can't ignore the costs. So if GPUs are too expensive, there's a high chance people will move to cheaper alternatives like advanced micro devices as chips or custom chips provided by Broadcom. That's the only way to profit. So the more demand increases, meaning the more applications come out, Broadcom's stock price will inevitably rise. It would be good if you listened to this article while keeping this storyline in mind. That's all for today's Big Jashim News on December 1 sign. Thank you for staying with us until the end of the first broadcast of this new month. Thank you, everyone. For your information, December has the highest chance of a United States stock market rise among all 12 months. So the probability of it going up is much higher than the probability of it going down. Anyway, I sincerely hope that history repeats itself once again in December 2025. Let's keep fighting together until we retire from United States stock investing. Have a happy day. Thank you. Hello, Mijun family. Happy Friday. As you know, I have plans on weekends, so I don't really rest then, but it's still a nice Friday morning.
Hello, everyone. It's been raining a lot lately, but I think I'll get used to it. It almost feels like autumn. Let's review the analysis article. Everyone just talks about NVIDIA now. But have you ever thought that there might be another hidden winner in the artificial intelligence boom? Yes.
That's right. So today, while everyone is going crazy over NVIDIA, there's a company that's quietly but very powerfully emerging as a key player in the artificial intelligence market. That company is...
You're talking about Broadcom, right?
Yes, that's right. It's Broadcom.
People say that artificial intelligence is moving from the era of learning to the era of inference, but let's take a closer look today at why this is such a huge opportunity for Broadcom. Artificial intelligence?
Let's dive deep into how the landscape of the artificial intelligence market is changing and what hidden weapon Broadcom has at the center of it all. Yes, first, I think we need to briefly go over the concepts of training and inference. Yes, there are mainly two stages in artificial intelligence. There's the training stage, where you create and train the model, and then there's the inference stage, where you actually use the trained model, like when we use ChatGPT. That's right. The market is entering a phase where demand for inference is surging.
I see. Then why is this inference market such a special opportunity for Broadcom? Is there something different compared to NVIDIA GPUs?
Yes, that's a very good question. Here's where Broadcom's first, let's say, secret weapon comes in: custom semiconductors. Yes, major tech companies like Google and Meta feel burdened by their constant reliance on NVIDIA GPUs, which are extremely expensive.
Because of the cost?
That's right. We focus on providing each client with custom chips optimized for their inference tasks, making them cheaper and more efficient.
Wow, this feels like a custom suit, not something generic.
That's right. It's a strategy that offers an answer to the fundamental concerns of big tech. They've already landed Google, Meta, and ByteDance as clients.
From big tech's perspective, it's no surprise they're eager to buy. But is this strategy backed by real numbers?
Of course, you can see from the numbers that this isn't just an idea. Artificial intelligence semiconductor sales hit $5.2 billion in Q3, up 63% from last year.
Artificial intelligence sales already make up a third of the total. This growth is really incredible. Yes?
And this isn't the end. By gaining new customers, they've secured over $10 billion in extra orders. So the company expects its artificial intelligence revenue in 2026 to grow much more than previously anticipated. Wow!
Their cash generation is impressive, turning 44% of revenue into cash in 2 years. Isn't that nearly printing money?
That's right, they're a top-tier company. I mean, their chips are impressive, but as I looked through the data, I started thinking Broadcom's real hidden weapon might be elsewhere. It's their networking technology. They've essentially taken control of the highway connecting chips in artificial intelligence data centers. Artificial intelligence data centers now link millions of accelerators into massive clusters, which are now mainstream. How quickly and efficiently you connect these chips is now as important as chip performance in determining a data center's success.
Because you can't have bottlenecks.
And in this Ethernet networking field, Broadcom is an absolute powerhouse with an almost monopolistic position.
You mean the Tomahawk 6 switch? I was really impressed when I saw it. They doubled the bandwidth over the previous generation while lowering power consumption.
It's the industry's first 102.4 Tbps switch. Thanks to this technology, we can now build ultra-large artificial intelligence clusters with much less power. It's an absolutely essential component for expanding artificial intelligence infrastructure.
That makes it clear. Then what about Broadcom? First, the explosive growth of the artificial intelligence inference market. Second, cost-effective custom chips for server delivery companies like Baymin. And third, this overwhelming networking technology. So it has all three growth engines.
That's right. Broadcom is quietly dominating the main artery of artificial intelligence infrastructure. Wow.
They're the true powerhouse behind the glamorous main characters.
I think that's something for us to think about today. As investors, will you focus only on the glamorous main characters, or will you recognize the value of these real powerhouses who design and build the entire stage for those main characters to shine? Thank you for being with us today as well. Thank you.
A small dream is important. Let's plant a hopeful future together, growing little by little every day. Is there excitement blooming in your heart? Let go of your greed. It won't be any different this time either. The result is just a continuation of the process. Even if darkness comes, I'm not afraid. I'll hold Miju's hand and move forward, becoming the light for the unseen tomorrow. Happy investing, supporting each other's dreams. Let's walk together down this beautiful downhill path. Happy investing. With Miju, we all boldly invest in domestic stocks.
Until the day we retire.
All together.